Hello, everyone, and welcome to the Rapport Recovery webinar series. It's our fourth installment, and we're so lucky to have Eira Thomas with us, who is the CEO of Lucara Diamond Corporation. It's a mining company based in Canada, but with operations in Botswana. Welcome to Eira, and thanks so much for joining us.
Well, thank you very much. It's my pleasure to be here with you all today.
And given the hour as well, I know it's very early in Canada where you are, so it's appreciated. How are things on your side of the world? It's in this whole lockdown situation, and where are you guys at?
Well, you know, we're kind of all scattered across the globe right now. We've got part of our team in Ontario, part of our team in Nova Scotia, part of our team in London. I'm on the West Coast in Vancouver, and of course we've got the bulk of our team in Botswana. So we are getting very good at navigating time zones, and you know, for us here in British Columbia, it's actually been a pretty good place to be hanging out through COVID. We certainly have not been as hard hit as other parts of the world, and you know, we're starting to see things open up again now, so that's encouraging.
That's great. My impression is that it's a good place to hang out at the best of times. So
Yes,
all the more so now. But you know, it's been such a crazy period. You know, it's now the first half of the year that's almost up, and so you know, when this virus started to spread and started to affect the industry, it was kind of an inopportune time. Can you give us an update on how it initially affected Lucara's operations? You have the Karowe mine in Botswana, which is an important mine, but other operations in your sales operations, etc. How's it affected your operations, and where are you at the moment?
Yeah, listen, you're right. It was an unfortunate time. I mean, there's no good time for something like COVID, but you know, we really felt that the market had shown some good strong signs in the fourth quarter of 2019. We saw some stabilization, and we were feeling quite optimistic about 2020. That obviously changed pretty early on in the year, and you know, for Lucara, we are quite fortunate in one sense, and that is, you know, we're a very small producer. We're a high margin, high value producer, but you know, we produce 400,000 carats a year, and we basically sell those carats in quarterly tenders and through Clara, our digital web-based sales platform. So you know, what we saw since the beginning of the year is we continued to mine. You know, being a Botswana diamond mining company, we were declared an essential service by the government of Botswana. So that meant that our mine has been able to operate through this period. So that's been really great. We've obviously had to put in a number of new protocols with respect to social distancing and hygiene, and we're operating under those. But you know, we've got about a third of our workforce actually working from home. We've implemented staggered shifts, and through all of that, we've been able to more or less meet our production outlook for 2020. The other thing the government's done that's been really helpful is they've allowed us to hold sales outside of Botswana. So we've actually been able to export our diamonds to Antwerp, and that has given us, you know, good flexibility and optionality. We did complete our first quarterly tender of the year in early March, just before the COVID crisis really took hold. So that was another, you know, fortunate development for Lucara. We felt, you know, pretty comfortable with the results of that sale. You know, certainly prices were off, but not off, you know, dramatically. And then we made a decision really to delay our second quarterly sale. Originally, we planned to do that in May, but we are now actually in the process of holding our second tender of the year, and that will close later this week.
So it's going on at the moment. That's very interesting. Okay, so
yeah.
we'll get back to that, because I do want to talk to you about the state of demand, and you might have some insight from your sale this week. But I would like to deal with the COVID situation first. In that, you're firstly, it seems there's a very big difference between the major producers who would have had to scale back production, and the sort of mid-tier and smaller producers, some who had to close their mines, be it temporarily, and others like yourself who are able to continue to operate. So it seems that you're in a fortunate position in that sense. But how has it affected your day-to-day operations? And your interaction with your workers. You're working very remote now from your mining staff in Botswana.
Yeah, no, absolutely. I mean, it certainly has changed things, but in some ways, it's actually been a really interesting exercise because, of course, we and the leadership team at Lucara would be traveling through to Botswana very frequently. In some cases, some members of our team would be there once a month. I would be there at least once a quarter. And obviously we're unable to do that, but instead, we're doing a lot of meetings through Teams and Zoom and different applications. And that's been a way to kind of connect through to the workforce. And we've been doing them frequently. I think the most important thing is to really stay plugged in and make sure that the communication lines are open. I think the toughest piece through all of this for our work has really been around the psychology of working through COVID and staying safe and keeping your family safe. So we've been very focused on that aspect. We've got a full-time psychologist working with our people on the ground, and that's been really helpful, and people have taken advantage of that opportunity. And then we just have very frequent touch points where we're really trying to engage with different segments of the workforce regularly. And I have to say, I'm incredibly proud at how our employees have stepped up and really taken this on, not only in what they're doing in the mine, but in all aspects of life in Botswana. We're doing an awful lot within our communities of interest. We're involved in a number of initiatives related to COVID in the community of Latlakani. So everyone's really banded together, and it's certainly been great to see.
It's very interesting that what you mentioned, that you have a psychologist on that you're working with. I would imagine in Botswana. Particularly that is helping people through this crisis, and because it has kind of it's certainly taken us out of our comfort zone from a professional point of view. Just speaking personally, I wasn't used to working from home. I would go to the office. I would interact with people. On a professional level. So it has taken an adjustment, and I think. On the mining level, it would disrupt their normal routine, for lack of a better way to describe it. How do you enforce social distancing in a mine, or is it naturally a sparse sort of activity?
Yeah, that's a great question. And some aspects of our mining operation are naturally social distance. For example, working in the pit in the mine itself, and driving around in big trucks. Those are easier situations to manage. Where it gets trickier is actually in our plant and in the mill and in the diamond recovery sections. And so we've had to really think through those protocols carefully, and we put a lot of effort at the very beginning of all of this to really plan and schedule. So now we're using staggered shifts. We've changed our approach on security, and we've got a lot of remote monitoring going on there, as opposed to having physical presence and people. So we've rethought a number of things, and actually it's been a great learning for us. In some ways, we've found that we've been able to create real efficiencies, and those are opportunities for us going forward. So it's been a big learning, but overall, I think it's going reasonably well. It's going very well, actually, and I think, you know, as a mining company, you know, we've been extremely focused on safety at Karowe. So the culture is already there. I mean, we went 2 years without a lost time incident at our mine site, so we do have a very disciplined kind of culture that is very focused on health and safety, and that helps, I think, when you're introducing new protocols under COVID, because people are already used to working in an environment with structure.
Mm. And I would imagine that there is a very strong sense of community, you know, in those sort of mining communities. There generally is, and so they would naturally look to Lucara to provide some support within the broader community that's affecting the miners. So how have you approached that? You know, certainly from I think these sort of programs consumers are taking note of, you know, in terms of what corporations are doing to help communities to you know, on an environmental level, on various levels. So
Yes.
So what has Lucara brought to the table?
Yeah, most definitely. I mean, that's a key focus area. We have a kind of a very strong focus on environment, our social goals, as well as governance. We are a member of UN Global Compact. We report under 10 SDGs, and we put out a sustainability report. But I think that, you know, the key thing for Lucara is that, and our approach to kind of community engagement is to actually get into those communities and sit down and listen to their needs and wants. And I think that's been really important in how we've developed our programs. I think often, you know, whether it be shareholders or consumers sort of think about sustainability and the work that you do around that is being more difficult if you're a small company, and that, you know, a lot of it is about writing checks. And what you know, we've learned is that it's really not about writing checks. It's about identifying opportunities within the community that are priorities for the community, and then looking at innovative ways to kind of go after that. So, you know, we did contribute to the government's COVID relief fund, but equally as important, we had a number of important initiatives on the ground. We were involved in building a women's shelter. For example, we've been involved in actually funding kind of a community testing center, and there's a whole host of things that we've gotten involved in on the ground in relation to COVID. And then, of course, we have our regular kind of sustainability programming, which is ongoing. That has been ongoing through the crisis. We have not yanked funding for any of that. We are in the process of building a community sports facility, and associated school. We have had to delay that for obvious reasons through COVID, so that project has been delayed through this piece. But our other community investment initiatives are going, you know, full tilt ahead. We were involved in building, for example, a community farm in the community of Mokabilo. This was a community that had basically been prioritized because of an ongoing challenge with malnutrition in that community. So we ended up financing and sponsoring a community farm, which has been hugely successful. And, you know, not only are we delivering produce and eggs into that community and into the local schools, the excess produce and eggs are going into the local supermarkets and creating a revenue income for that community as well. So we're always looking for ways to invest that will diversify the economy and leave a lasting legacy beyond you know, the life of our current diamond mining operation.
Well, Botswana is such a wonderful example of how the diamond industry can make an impact. I mean, obviously, we do these make these contributions because it's the right thing to do, and it's because we feel part of the community as well. But do you feel that there is an added element, especially in this COVID-19 environment, that that consumers are looking at, that that corporate social responsibility activity in you know, in the products that they buy and in the companies that they're engaged with.
Absolutely. I think that we've seen that interest kind of growing in recent years. And I think COVID certainly, you know, created more of a lens on that aspect as well. And, you know, consumers want to know that they are supporting responsible companies through their purchases, companies that care about the environment, that care about social goals, and are properly governed. And we think that makes absolute sense. And you know, we try and you know, create as much transparency around those efforts as possible, not only in our existing mining operations, but also, you know, through our sales channels. And Clara is an example of that. You know, our web-based digital sales platform creates complete transparency on where each individual diamond is coming from, and it allows consumers, you know, to buy with confidence.
And again, we'll get to Clara, because I think it's an interesting test case for what's going on digitally in the global economy, really. But I wanted to touch on the supply-demand dynamic at the moment. You know, you mentioned that you're able to achieve your original production plan in 2020. You're still on track to achieve that. Quite clearly, sales are going to be down, and so you would naturally build some inventory. And we're seeing that that inventory buildup across the mining sector. There's a feeling that there was a lot of rough to begin with in the mining sector after 2019, goods that miners couldn't sell or didn't sell. And so there's going to be this build-up even further in 2020 as a result of the economic slowdown. So how do you assess that supply-demand dynamic, and you know, moving forward, how is that going to play out in 2020?
Yeah, listen, I think there's a couple of points on that. I mean, I think the way that we're looking at COVID is that it's an interruption on the recovery of the diamond market. It's not going to prevent that recovery. You know, we started to see prices strengthen in the latter part of 2019, and we do think the supply-demand fundamentals are actually going to improve in short order because of aging mines and lack of new supply coming onto the market. I think it's also important to point out that though, you know, we've been operating through this period, many mines have not been operating. You know, we have Dominion tethered in Canada, Botswana, you know, curtailed production. We had curtailed production out of many mines. So yes, there's some inventory building, but at the same time, we've seen, you know, Stornoway is another example. That mine is on care and maintenance right now. So there has been a lot of carats taken out of the pipeline, and obviously De Beers and Alrosa have made, you know, decisions to slow their production as well. So, you know, I think that aspect is perhaps not going to be as important in my mind as what is demand doing. You know, are we going to see demand coming back strongly post-COVID? You know, what is that environment going to look like? And I think that, you know, we are getting some encouraging signs out of Asia. I think the US is more problematic, but certainly signs of life in Asia, I think, and you know, we're starting to see sales, you know, starting to take place again in Antwerp. So I think all of those are positive signs. I think 2020 is obviously going to be a challenging year. You know, for us, we started the year with a clean balance sheet with cash on hand and no debt, and that was very helpful. It's given us a lot of flexibility. You know, we made a decision that we are, you know, going to be very prudent and just kind of watch this market and be opportunistic. We don't have to sell diamonds right now. But we think the market is starting to pick up, and that there is now an opportunity to sell diamonds and at reasonable prices. So that's why we have we have gone forward with our second tender of the year. The tender is focused on our smaller diamonds, so our minus 10.8 population. And we'll see how we do here, but what I can tell you is that we had over 120 companies signed up to come and view goods, so we certainly put that as a positive sign.
Interesting. And I mean, we are hearing these anecdotal reports about an improvement or a faster than expected recovery in China in particular. And as the US starts to open up again, one never sort of bets against the US consumer. That's my personal take on it. There's a certain resilience and culture of shopping that is prevalent there, and that helps the industry. But how long does it take for that recovery to filter through to the rough market? The rough market is it's reliant on the supply, on consumer demand, but it filters through from the retailers restocking to polished dealers finding the goods and having the goods already until manufacturers need to go back into the rough market. So is there sort of a lag that we can expect from within the recovery that the rough market would be the last to respond?
Yeah, I mean, I think that's a great question. I mean, I think we need a crystal ball for that one. I think it will depend on what happens here with the emerging demand. And what is interesting, I think, is that we're starting to hear about demand for diamonds, not only for jewelry, but also for investment purposes. And in a crisis like COVID, that would make sense. But certainly, we're getting a lot more phone calls, as you may be aware. I mean, 70% of our revenue comes from diamonds greater than 10.8 carats in size. So we're heavily weighted towards the large stone market, and yeah, we're getting a lot of inbounds now on consumers that are looking for high value, high quality, large polished for investment purposes rather than for straight jewelry. So I think that's interesting. And there's many different schools of thought on this. Some feel that it's going to be very much a U-shaped recovery for luxury products. And diamonds, I think, has lagged behind other luxury products, and I think that's something we really need to focus on as an industry is how we really connect through to that the consumer and focus on the demand side of it. The joint venture that we did on one of our diamonds with Louis Vuitton is an example of that, where we're really trying to use the power of that brand to kind of to help bring kind of awareness to our operation and to Botswana and natural diamonds, which I think is important. I think those brands have the potential to really change that demand piece for the brand.
It seems that the luxury brands are initially hard hits, but they're also the quickest to recover.
Yes.
And so it makes sense in a way that you're receiving, or you're seeing interest in those large stones in the high end top quality goods, which I think we're also starting to see in the polished market from our point of view as well. That's something that we've reported on. But overall, the bulk of the market is the commercial quality goods and the smaller stones, and there is clearly a long road ahead in that sense. How does that affect your production plan at Karowe? We understand that you've delayed or put on hold your expansion plan to underground mining. So what is the overall sort of how does it affect your development of Karowe?
Yeah, that's fundamental for us. I mean, we haven't actually delayed our underground. What we've done is basically delayed our plans for 2020. So basically, that will mean that a lot of the work we had scheduled for 2020 will be pushed into 21. That is going to mean that we've got pressure overall on our schedule, but we had quite a lot of room in that schedule to begin with. So we're feeling pretty comfortable about it. And you know, for us, we wanted to get through the first half of this year and just see how we are going to do with respect to diamond sales, and that will in turn gauge how aggressive we want to get on our underground spend. Luckily for us, most of the work on the underground was scheduled for the fourth quarter, so we still have time. Right now, we've got a very scaled back plan, assuming that the world continues to be very difficult. If it starts to recover quicker, then we have the ability to turn that back on and actually ramp up on the underground plan pretty quickly. So, you know, our aim here is to still have the underground completely built and delivering ore to the mill by the end of 2025, early 2026. So this is a long road ahead for us. But we're very excited about the underground because what we've really learned in the last 2 years, and even after 7 years of mining at Karowe, there's more value in the ground today than we've mined to date. So, you know, you've got the potential to extend this mine out to 2040, and that's a big economic prize for us.
Is that contingent on pricing? Your decision on when to proceed?
No.
It's not.
No, we've used extremely conservative pricing in our feasibility study already, and obviously we won't be delivering ore until 2026. So we're certainly, the key thing for us right now is financing. We had planned to finance all of our underground expenditures in 2020 from cash flow, and we still will fund all of our 2020 expenditures from cash flow. It'll just likely be a much smaller amount than we originally budgeted, which was around $53 million. But in 2021, as we start to ramp up on that spending, we will need to borrow some money, and so we're in discussions with banks. And that's going to be key for us is putting together a financing within the next 12 months to assist us with that expenditure. But again, we've used very conservative pricing assumptions, and we're feeling, very confident after many discussions with banks and lenders. We don't have any debt on our balance sheet currently, so that's very helpful. And so we are, that's our big goal here, is to try and get that financing squared away, ideally before the end of the year, but if not, in 2021.
Right. The whole issue of raising funds has been an interesting one to watch of the mining sector from the sidelines. But I don't want to go too deeply into that. I think a lot of the smaller miners that have had to put their operations on care and maintenance are struggling in that aspect, and it's understandable given the market environment. Before we go on, Eira, I do want to mention that we will leave some time for questions from the audience.
Okay.
So I encourage people to, if you have any questions for Eira, to please put them in the Q&A section of the Zoom app. But I would like to now look at move to the sales side of things. And you mentioned that you've been able to hold viewings in Antwerp. And Clara, I would imagine, has become a very important aspect of your sales strategy, even more so today. Given that the world has really moved so quickly to digitized e-commerce platforms, you kind of foresaw this, and it was with the acquisition of Clara, and it was an unusual move for a mining company. That you've spoken in the past about the growth and acquisition opportunities that you were looking at, and one naturally looks at other mines. But here you looked at a different sales strategy. So can you just talk a bit about Clara and how it's if there's been if it's put you at an advantage in this COVID-19 environment?
Sure. The answer is yes. I think it definitely has, albeit with the caveat that we've had some challenges as well through this COVID piece, and I'll touch on that in just a moment. And the question around why Lucara would want to get involved in a sales platform like Clara really relates to I think Lucara's reputation as a company that's really looked to technology and really tried to be innovative in our approach to our overall business. We were the first diamond mining company to use XRT technology, which has been really important in enabling us to recover our large high value diamonds without damaging them. So when we had the opportunity to look at Clara and acquire Clara, what we really liked about it was that it sort of was focused on innovation and recognized that the way we sell diamonds really hasn't changed in over 100 years. And we felt that there was a huge opportunity to transform that sales supply chain and create a much more efficient marketplace. And that was really what kind of drew us to the Clara platform. The other reason that we were interested in it, we saw Lucara as a logical sponsor of the platform. We are a tiny little producer, and most of our value is in stones greater than 10.8 carats, which are not actually, in fact, sold on Clara. Clara is really focused on diamonds between 1 and 10, up to 15 carats, and the better colors and qualities, the bread and butter goods of the industry, if you like. So our real aim with Clara was to commercialize commercialize the platform and demonstrate that it works using diamonds from Karowe, but the whole intent was to and is to open up Clara to other producers to sell through this digital web-based sales platform. And I think what's important to remember about Clara is it's not just a digitalization of existing sales processes. We hear a lot about digital sales taking place, whether it be through, Alrosa holding digital sales, De Beers holding digital sales, but Clara is not that. Clara is not just taking our offerings that we would normally sell through tender and making them available for sale digitally. It is really about transforming the whole supply chain from a push style sales system where we're selling our diamonds in assortments or batches into a pull style sales system where we're actually asking our customers to tell us what it is that they would like in polished, not in rough, but in polished. What is it that you want to make? And then Clara really is all about finding that perfect rough stone to fulfill that specific order. And so it's completely unique in the spectrum of digital offerings, and it is the only sales platform of its kind. And so obviously through COVID, where travel is restricted and people, are just unable to go and look at goods in person, the interest in Clara has grown tremendously. And in fact, through this COVID period, we're actually up 20% on our customer base. Our challenge has been that, our big plan for 2020 was to onboard third-party production from other producers. And when COVID hit, 2 big trials that we had planned were delayed. And so we are, very much hoping to get those trials back moving. But COVID was pretty inopportune in that sense, and that we hadn't quite gotten the ball rolling there yet. It was all sort of in the planning phase. And that's what we really need now to get Clara to the next level. And we have basically, more demand now that we can fulfill with diamonds from Karowe alone. So getting that third-party supply on is what the next step, really requires. And we're very optimistic by the end of this year we'll be able to do that.
Well, I'm surprised in a way that that you had to delay that incorporation of third-party suppliers. I would imagine that this would be very attractive for a supplier who didn't have a platform to sell digitally, and particularly in such a curated way. I think that it really it solves those two problems. For a miner, that it gives them a market, and it's in a world where people are not looking for mass supply. They're looking for very specific goods that are going to fulfill their demand needs. I would imagine that I'm plugging your platform, but I would imagine that that would be very attractive to other suppliers to tap into.
Most definitely, and thank you, yes, for plugging our platform. We appreciate that. The challenge was really around logistics, quite frankly, and also with companies that, when you're in the middle of a crisis and you go to your respective boards and ask them to completely change how you're selling your product in a time of crisis, it's a difficult ask, and people tend to. And the companies that we're dealing with, and I can't tell you who, we're under NDA, just were, unable to move forward with those trials kind of as planned. And it was really a combination of logistics and the challenge around just governance. But we are feeling, pretty optimistic about getting those trials going here now, as the world starts to open up again, and as people are getting more comfortable that there is demand for diamonds. But the other thing I will point out is that we continue to sell diamonds on Clara through this whole crisis.
Right.
We can sell sales every 2 weeks, and our customers continue to buy, and so I think it's a very encouraging sign, and we are excited about where this will go post-COVID, now that people are generally more comfortable with the idea of digital sales. And that's what's really important. We're working very closely with Serene, our partners on this. We have an exclusive arrangement with them for a decade on Clara. And, this is, we've been, working very diligently to think about, the next steps for Clara and where this all goes. But, people are very focused on provenance. They're now very comfortable that when, they buy these diamonds and place their orders, and those orders are fulfilled and they're delivered, that they're polishing into the polished orders they expected. And then they come back and sort of increase their orders and the breadth of orders. So it's the feedback that we've been getting is very positive.
Right. Having been able to continue sales on Clara throughout this period, can you give us an indication of prices? Because that's something that we're not, that's kind of scarce in the market. From our point of view, is getting information about the level of rough prices. And is Clara a fair representation of rough prices in the market?
I think Clara is too small at this stage to be representative. We are ramping up, and we think we're an important data point. And what I can tell you is, through I would say the darkest part of the crisis, because I do think we're beyond that now, by the way. We obviously saw some fairly deep discounts, and we had to make a decision on, where to kind of draw our line in the sand. What's important, I think, here is that we've come off that bottom, and that in the last several sales now, we've seen strengthening prices. So we are certainly encouraged by that. I think that that is something to be optimistic about.
Okay, I want to ask one more question before we open it to the Q&A from the audience, and that is, yeah, I think it was in February that you recovered a 549 carat stone from Karowe, and at the time you withheld it from sales within the first quarter. What are your plans for that diamond? Is this an opportune time to put it on the market? Is it on the market? Are you looking for partnerships like the LVMH deal that you have?
Yeah, it's not on the market. I think what we've been trying to really message over the last couple of years, when we do kind of our forecasting of revenues for the year, all of those large exceptional diamonds are excluded. So, you know, we know they're there. We just don't know exactly when we're going to recover them. So we are not reliant on that 549. Obviously, in a time of crisis where we're having difficulty selling stones, that does represent a significant opportunity for us. But it's such a special stone. We actually think this could be the nicest quality stone we've ever recovered at Karowe, and just in terms of its purity. We're not in a rush to do anything with that diamond. Yes, it's possible we would, you know, consider a partnership, but you know, we are not in a, you know, at a point where we need or want to make a decision on it. We don't feel it's the right time to maximize the value of that diamond by putting it up for sale today. But we will be certainly exploring different potential opportunities for it in the coming months.
Right. Well, as a journalist, I get excited about these big numbers and the large carat size that Karowe has been able to produce. You know, the Lesedi, of course, the Constellation diamond at the Lesedi Lorona at 1,100 carats. I can't even think that high. The Constellation at 800. Do you think Karowe has a bigger diamond in its stomach?
Yes. Yes, I do. You know, we broke the Lesedi. We know that was part of a bigger stone, and so that led to us actually upgrading our mill to recover even bigger stones, and we call that recovery circuit the mega diamond recovery circuit. And the 549 actually came through that circuit, but we have the potential to recover a diamond as large as 5,000 carats. And you know, I don't know what or when, but I certainly believe that we will surpass our record right now, which is 1,758 carats. That was the Solo. And you know, it's the only diamond mine in history to have produced 2 + 1,000 carat diamonds. So I do think that that's you know, not only possible, I think it will happen eventually. Keep in mind that all of these big diamonds, including the recent 549, come out of one geological unit we call the EMPKS, and which is a complicated acronym that we need a new name for, but anyway. And this particular geological unit dominates the underground mine plan. So, you know, right now, it accounts for a relatively small volume in our open pit, but as you know, when you get down to 800 meters below surface, almost 80% of the kimberlite is EMPKS. So we have a lot more of that material to mine in the underground.
Okay, I'll keep that acronym in mind. As we move forward, and I look forward to that 5,000 carat headline. Let's take some questions. The first one is can we expect corrections in prices of rough diamonds?
From where? From now? Do you mean like corrections upward? I mean, we certainly anecdotally know. I mean, there's been very few sales held, so there's very few data points to refer to. But obviously, some producers sold diamonds at deep discounts through this crisis, and our expectation is that already that's starting to rebound, and I think Antwerp opening up, demand in Asia will certainly help.
Okay. This other question is given your strong background in diamond exploration and production in Canada, and I think we haven't mentioned how extensive a background you have. You were previous to Lucara, you were involved with Stornoway's Renard mine. You've had you have an exciting story to tell, I would imagine, about the Ekati mine. And so given that background, what are your main challenges to operate a mine in Botswana? Is there a difference that you're experiencing in the Canadian mining fraternity and the Botswana one?
Yeah, listen, I think in some ways Canada is as tough as it gets. These mines are extremely remote. We're dealing with an Arctic environment. They're accessible only 4 months of the year, via an ice road. So Canada certainly has a number of challenges. Botswana, by contrast, certainly we're dealing with much nicer weather, but our mines are road accessible, and one of the great things about working in Botswana is that you have access to educated, experienced engineers and miners, and that's a huge help on where we started in Canada, in remote communities where we had to train people that really had no experience in diamond mining. So in Botswana, 98% of our workforce is Botswanan. In fact, our mine is run by the first ever female CEO of a diamond mining company in Botswana, Nassim Lari. She's born and bred in Botswana, educated in Botswana. Our general manager, Joe Michibe, is also born and educated in Botswana. So there's an awful lot of talent, and I would say working in Botswana has been, in some ways, a real dream compared to the challenges of working in the Arctic. I would say, our biggest challenge in Botswana really relates to, around, power reliability. That can be a bit of a challenge in Botswana. But otherwise, it's been a very positive experience.
There was a story, I don't know if it was Mining Weekly or Reuters, that had a profile on the head of the mining operation at Karowe, and that's certainly a story I would encourage you to get out. It's a very good, nice story that I think consumers would be interested to learn about.
Well, sorry to interrupt you, but one thing I would certainly encourage, if any of the listeners have not seen, we were involved in with De Beers and the Diamond Producers Association, now the Natural Diamond Council. We were involved in putting together a little movie on Botswana diamonds that was done independently through a group called EcoAge. And it really tells the story of diamonds in Botswana and what it sort of meant to the country. And I think it's a great sort of 10-minute kind of overview. If you haven't seen it, I would encourage everyone to look for that on our website or the Natural Diamond Council website. And
on our website, I think we did cover that. We did cover that story, and it was a great little easy to watch documentary featuring none other than yourself. So we have another question that regarding the Argyle mine. What is your perception of the impact on the market that the closure of Argyle will have by the end of the year?
Well, I think it will have a significant impact. I mean, Argyle represents, 10% of global production by volume. if not value. So, we have seen some fairly serious headwinds on the market for rough diamonds over the last few years because, of the large volume of small diamonds that came onto the market through new mines in Canada, particularly both Renard and Gachagua. And I don't think any of us really foresaw how that would impact the price of small diamonds. And I think Argyle kind of going out of production will certainly be a big benefit to those producers that have a production profile which is largely focused on those smaller goods.
Does that include Lucara? Are you within that range on your smaller commercial goods?
We definitely are, but again, 70% of our revenue comes from diamonds greater than 10.8. So we're less impacted by Argyle closing in that sense. But we think it's going to be good for the overall market, and certainly, that's good for all of us.
Okay. As you go underground, will you be employing more people? Does it?
Yeah, listen, the underground operation is likely to employ fewer people than more people. But we're now extending the mine life from 2026 to 2040. So obviously, those jobs will be important jobs and will continue to generate significant taxes for the government. And so we see that as very positive.
A lot of people are asking about prices, so I'm going to be their voice. This question is, what do you estimate the average run-of-mine price per carat will be over the next 12 months?
I mean, listen, I wish I knew. That is the reason that we have basically we rescinded our guidance in the first quarter, because it is really uncertain. I think we remain hopeful that the latter part of the year we will see prices recover or rebound to the point where we can reinstate outlook, and are we going to get back to where we began the year? It's less certain. I think as Lucara, as prudent kind of managers of a small business, we are anticipating that 20 and 21 will be tougher years. But we are hopeful that we will see a rebound in prices in the latter part of the year that can be then sustained or grown in 2021. So I'm not going to put $1 per carat value out there at this stage, but we'll know more, and we will be certainly informing all of our stakeholders and shareholders at our next quarterly update on how we've done through this latest tender. We'll have a lot more insight at that point, and we'll also be talking more about our run-of-mine production, and particularly our large stones. We are looking for ways and means to maximize value. As our chairman Lucas Lundin likes to say, never let a good crisis go to waste. And so we've been really thinking hard and exploring ways and means to ensure that we can not only get through this but come out the other end stronger.
Right. To what extent do you look at the prices in the polished market, and the in terms of, well, I guess if you're selling by tender, that it's really the market that's setting the price.
Yes.
But do you foresee some profitability coming back to the manufacturing sector?
Wow. Well, we certainly hope so. I think obviously, we want to see a healthy pipeline here, and that means that I think we've all got to work together to ensure that we've got a product that is desirable and that consumers want to purchase. And I do think that we're in a world where change is inevitable. I think we're going to see more attrition I think there's going to be a focus on, businesses that are more resilient, that do have access to capital, that do have, markets that they distribute it to that are active and resilient. So, what is that going to mean for the manufacturing sector overall? Is it going to look exactly the same as it did prior to COVID? Probably not. Nor is the mining side of things going to look exactly the same either. We've had a lot of companies that have gone through, a lot of distress, and there's access to capital is challenging. So I don't think it's going to look exactly the same. But I think if we work together through the supply chain, yes, profitability should come back into all aspects of that value chain.
I certainly hope so. Just to change direction a little bit, we have a question here that says you've had such an exceptional career in mining, a sector which is particularly dominated by men. What advice would you give to young women geologists today who would like to pursue a career in diamond mining?
Wow. Well, listen, I would always encourage young female geologists to consider a career in mining. I think there's so many opportunities in mining for young women in all aspects of the business, whether you're a geologist or an accountant or a lawyer. I think for diamonds, it's such a small segment of the overall mining industry. It's very, very specialized. It is certainly more challenging. There's very few diamond mines around the world. And so, it is kind of a specialist business, but if it's something that you're passionate about, then absolutely pursue it. And, I am hopeful that we are going to see more money kind of flowing back into the exploration space. It's been a part of our industry that's really suffered, not only through COVID, but in the several years leading up to COVID. We just saw a real lack of appetite in investment circles for funding diamond exploration, and that's the reason we haven't had any major world-class discoveries in many years. So I am hopeful that we will see some money start to flow back into that space. And I think as diamond prices recover, and I believe they will, I believe that the supply-demand fundamentals that we're seeing play out with the closure of Argyle, with the maturing mines in Canada, and that's all going to I think lead to lower supply and better pricing, and that in turn hopefully will encourage investment in the exploration sector again, and hopefully lead to more jobs for young geologists.
On that exploration point, has the threshold to decide to go ahead with developing a mine been raised? Is there, if you consider the cost per carat that the mine might require, given the supply-demand dynamic in the industry over the last few years, and the level of pricing, of polished pricing that has declined essentially, but also then in view of the COVID-19 environment, has that decision making on to develop a mine, has it changed?
I think what a lot of people maybe don't appreciate is just how challenging it is to find a diamond mine and how rare they are. I think we all appreciate that diamonds are rare, but actually finding an economic deposit is incredibly challenging, and it requires a lot of capital, a lot more capital than you would need to invest, for example, to find a gold mine. And I think that risk capital and that appetite is just very low right now. So it's in terms of making a decision to develop a mine, I think that the challenge is that many of these deposits will require hundreds of dollars of investment before you even know if you've got an economic deposit. and that's the challenging piece to finance. You know, that threshold can be lower in places like Botswana, where you know the logistics are easier. We have, for example, a very small but important exploration program that's ongoing with a partner out of South Africa, who also has an office in Botswana, and it's a new technology again. You know, Lucara is always looking for opportunities on the technology side, and this is a joint venture where we're actually flying an unmanned aircraft. It's like a small drone, flying airborne magnetic surveys, and then we have a portable drill on the ground that is, you know, basically this data is being processed very efficiently in real time, and then we've got a drill kind of following along and testing targets. So we do have some exploration ongoing in Botswana right now, and it's very cost effective. It would be impossible to do the same thing in Canada. Again, you just wouldn't have the same road infrastructure to kind of make that possible. But you know, and that's what we have to, you know, really, I think, hope for and rely on is innovation and new technology that can really make the whole exploration process more efficient. So I am hopeful in that respect that we will continue to have new opportunities on the exploration side.
That's interesting. And certainly looking at it from an innovation and technology perspective it makes a lot of sense. And one would expect that that there is a lot of innovation in that space that's applied both to the diamond mining sector and other mining industries as well. You know, just coming out of this this COVID environment, or as we're in it, you know, another aspect that people sort of expect from the mining sector is that there would be more joint ventures, maybe more mergers and acquisitions, particularly with a number of mines that are struggling at the moment, single asset companies that in particular. So is that something you expect will come to fruition, that there'll be some sort of merger activity that we've been speaking about for so long in the mining sector? And then the next question is if Lucara is looking at that space.
Yeah, listen, I think this is the time to consolidate, and I think M&A is something that Lucara has always been interested in. You know, M&A is also incredibly difficult to do. People and personalities, there's very few assets out there. This is not a big space. Timing is important. You know, for us, we've been really focused on looking for the right asset that would be complementary to Karowe. We've been very focused on protecting our balance sheet and not wanting to take on, you know, too much debt so that we could, you know, stay nimble and stay flexible. So we continue to look, and we do think that it should happen, and that a crisis like this, you know, should make that easier. At the same time, you know, everyone's, you know, very focused on you know, managing their own businesses and protecting their own balance sheets, and you know, we do have a number of companies in the space that are struggling right now because they are burdened with debt, and it's difficult to service that debt when you don't have any certainty on cash flow. So it is a very challenging period, particularly for some of the smaller producers. And I think we do need to see, you know, a bit more of an outlook. We need to see the market kind of opening up, and just to give some sense of you know, direction here for the latter part of the year. But you know, we certainly continue to look at that space very closely and look for opportunities.
An asset that would complement Karowe, would that be in terms of geographical location or product, or product?
Well, in all aspects. really. And you know, I think there's so few assets out there that we've tried to be very open-minded in how we look at things. But certainly, you know, something that it's really about managing risk and understanding, you know, the potential upside there as well. So we're not too prescriptive. But at the same time, obviously, there's jurisdictions that we're more comfortable with. Botswana, we'd love to have another asset in Botswana. We also are really comfortable with Canada. Obviously, we're a Canadian company, and we all started our careers in Canada. So that's another area that we've you know spent a good chunk of time kind of exploring. But yeah.
Okay. Well, there certainly seem to be some opportunities for acquisition in Canada, but we'll leave it at that. Before we close, I'll just ask one more question. We've had a number of questions in the Q&A section. A number of them I didn't take because I think you have covered a lot of the topics that were brought up, particularly. Yeah, so I think it's appropriate just to close with maybe if you have a message to the industry that we can take with us moving forward as we develop out of this this COVID-19 experience.
Listen, I think we've got to stay focused on the long game. I think, you know, we can all agree, I hope, that the outlook for this business, I think, remains very positive, and we're living through a very difficult period. I think it means that we have to reflect on our existing businesses and look for ways and means to be more efficient. Maybe to think out of the box a little bit in how we approach our businesses, and that's certainly what we're trying to do, what we've tried to do, and will continue to do with not only our mind, but you know, our digital sales platform, Clara. And I think it's really important that we all work together. We're all part of a single industry, and we're all participating in different aspects of that supply chain. But in order for us to be successful, we all need to be successful and make sure that we have businesses that are sort of thriving through that supply chain. So with that, I'd just like to really thank you for the opportunity today, and I hope everyone stays well and healthy, and we look forward to brighter days ahead.
Absolutely, and thank you so much for joining us and being so open with your answers and an update on Lucara. It's greatly appreciated. So thank you so much, and thanks everyone for joining us. We do have one more installment of the recovery webinar series, which will be next week. We'll be interviewing Kent Wong, who is the CEO of Chow Tai Fook. So that should be an interesting discussion about what's happening in China and Hong Kong. And we look forward to you joining us then. But for now, stay safe, everyone, and we look forward to seeing you soon. Thank you, Eira.
Thank you.
Bye-bye.